Managing Director at DRChoksey Finserv, is joining us now. Deven, hi, good morning and good to see you in. Well, the biggest question, right? What do you do with HDFC Bank? Now, the stock has also run up a lot. I mean, it's up 10% in the last 1 month, and that's a lot for a behemoth like HDFC Bank. So from here on, is the risk reward still favorable for investors post the news flow?
Yeah, good morning, Sonia. Well, I would think so. I think though it has moved up about 300 rupees, I think from what it used to be, and I think today it is putting somewhere around 700 plus levels. I believe that I think the valuation is still favorable for HDFC Bank. So that is the first point I think as an argument going in favor of holding this stock in the portfolio. On the other side, the loan growth is continuing upwards of 16 to 18% for this bank, which is a large size bank. And in some of the loans, I think they are acting about 20%, including housing finance. So from a perspective of looking at this particular bank growing the size of the asset book in next 3.5, 4 years or 4.5 years, I think this company should be doubling the size of the book going forward. Up till now, the situation has been, I think, troubling them was the front end, that is your fintech platform adoption. I think significant amount of progress has been made on that front, which should allow them to expand the book size systematically, and at the same time, I think making the process much more efficient than what currently I think they are having. So from a perspective of looking at efficiency as well as I think the growth in the business too, I think the fintech is likely to play a major role as far as the HDFC Bank is concerned. And more, at the same time, I think the ownership of the stock probably would be increasing given the kind of holding that the foreign institutional investors have currently. I would think that I think they would have more dollars to put into this particular stock. So all the equations are suggesting positive. Maybe the stock should have the upside going forward of at least 15 to 20% in next 15 months or so.
Wow, 15 to 20% after the big run as well. Good morning, Deven, and good to see you, Ben. Well, we have a couple of other updates as well that did come in. Mangalam told us he was quite impressed with Avenue Supermarts as well as V-Mart's, quarterly numbers that they gave out. What's your sense in both these two companies? Avenue Supermarts not cheap at all, but still the street has been bidding up the stock.
Yeah, Nigel, good morning. Yes, certainly. I think this stock is never remaining cheap. I think it is always putting at a premium. But most important part, I think they continue to show a really better performance. Both, I think the existing stores are also suggesting that they are having more footfalls, and so the higher sales revenue reported on every successive quarter basis. And at the same time, the new store addition is giving them the volume play, if not immediately the margin play. So I think from that perspective too, I think this particular company is doing its math right. I think they continuously keep on adding the higher amount of growth by way of opening the new stores and probably I think managing the operations also systematically well. I believe that in this game, I think which is a volume game for even for the DMart stores, I believe that I think it's a game where I think probably if you manage your supply chain properly, the margins are intact, and on the higher volume, I think you end up generating better profits. So yes, I think equations are working well for this company. Valuation-wise, not cheap, so definitely not adding this stock in the portfolio at this point of time, as far as we are concerned in our PNS.
Right. I've got that. Another group have a view on names like Angel, etc. Would you dip in, or you think that there perhaps is more damage here?
Prashant, I think good morning. Well, I believe that I think immediately instead of putting names up, I believe that I think it's a move which is I think a probably much overdue kind of a move that the regulator has taken. I think the volume-based discounting or the incentive schemes, which probably the exchange have been carrying on for cornering the volume, has a side effect. That side effect has been, I think, increasing significant amount of trading activity in the market. And as a result of which, I think it is against the interest of the investors, I would say. It prejudices the interest of the investors on that account. So maybe I think in order to maintain a proper integrity into the marketplace, if the regulator has taken a view that I think this kind of practice, I think will have to be controlled, I would see, I think, a reason behind that. And that reason definitely, I believe, is to curb the excessive speculative activity in the market, which some of the discount brokerages, I think, are promoting into the market. So on a one side, I think you argue that I think they bring in a lot of new investors into the market. But on the other side, I think we always say that the kind of habits that is getting cultivated of trading, which is not probably, I think, in the right interest of the market as well, and also for those investors. So from that perspective, I probably believe that I think this move will have a positive impact going forward. So in the near term, some of the models, the brokerage companies' models, will have to be tweaked, and I think they may have to probably start charging from what they used to offer zero charges. I think on delivery-based transaction, particularly, I think there probably I think they will have to start charging the brokerage rate, which will offer also a fair play across. I think as far as I think market participants are concerned.
Okay, well, let's do one thing. Let's take a quick commercial break. On that note, on the other side of the break, Mitesh Thakkar and Sudarshan Sukhani will be joining in for some technical trades. Stay tuned.